Good morning, everyone, and happy Friday. So far, the market is not looking too good. It was looking pretty awesome in after hours yesterday, and Amazon was just blasting up on their pretty good earnings report. But it looks like the market turned around. Amazon's still looking good, but the market is not. So far this morning, some of the most important news to be aware of is the jobs report, which actually came in very, very good. We could see that there were non-farm payrolls surged by 467,000 for the month, which is awesome. And there was only an estimate of 150,000. So that's pretty good. That's a pretty nice beat. The problem is with rising rates. So if we head over back to Thinkorswim, we can just see even on these 30-year U.S. Treasury bond futures, there was a giant red candle right when this jobs report was released. And basically, when the bond futures go down, that means the interest rates are rising. So basically, rates are rising and the market doesn't like it. All right, and then Tom, you might be muted.
Yep, and even the Treasury index is up in a pretty big way, Mike. And I cannot believe that the market turned back over after those good earnings yesterday. The market was looking pretty explosive back to the upside. And I feel like this might catch some people off guard here because Amazon was trading in a pretty good way with their earnings. And it looked like the market might have started to been turning around. We had been kind of falling all week long on some of these missed earnings. And it just sucked to see that Amazon ended up not really making the market perform the way that we had hoped that it would. And it looks like these numbers played a pretty big role on these yields, Mike. As soon as those numbers came out this morning, these yields just started really dropping down. And like you mentioned, the bonds just got destroyed. And it definitely happened this morning, right around the release of that jobs report. So I don't know why the jobs report would make yields fall so much. And Mike, we talked about it a little bit before the stream, but we would think that the Fed might get a little bit more hawkish now that they're seeing jobs doing a little bit better.
Exactly. So this is actually kind of an interesting point. So a lot of people would look at the jobs report and be like, all right, so the market was only expecting 150,000 jobs to be added, but we actually saw 467,000 jobs added. So initially you'd think, all right, this is good news. But the problem is that we've had such easy monetary policy over the past 2 years from the Federal Reserve. They've just been pumping money into the markets nonstop. Obviously, that easy policy cannot just go on forever, and that's why we've seen the Fed's, I guess you can say, tapering and slowing down their easy policy. So Powell's been saying that, he's been watching jobs data and other metrics while, I guess you can say, considering rising rates and tapering. So basically, with the way the jobs report has been good, basically that tells Powell, all right, now I have more flexibility to taper more and maybe even rise rates and sell off some of the, I guess you could say, assets we've been buying up nonstop for the past 2 years. So while it's good to see a good jobs report, Powell looks at it and says, all right, cool, now I have more flexibility to, like Tom said, be more hawkish. So that's the main thing, and the market, it's just kind of split right now, Tom.
Yeah, it really is, and it's kind of a hard situation to grasp, but Powell has been saying that they will be looking at those jobs very closely, and with the way we saw the yields move as soon as that report came out, I think that's a pretty big sign that these are going to definitely affect some of their decisions over the next couple of months. So we'll have to see how it ends up going. But yeah, the SPY dropped this morning, Mike, all the way down to that 444 support. I know this was a pretty big support over the past couple of weeks. We can see last week, we actually straddled right around 444 before we ended up having a pretty big rise. So hopefully 444 holds up as a good support today, but I don't know. Honestly, I wouldn't bank on the market going up too much at this rate.
We'll see. The market's always surprising. But yeah, my watch just kind of looks like a Christmas tree today, Tom. Half the stocks are red, half are green. We have Amazon still leading the way. Snapchat, Tom, we didn't even talk about Snapchat too much yesterday. So Snapchat is blasting up. They had their first profitable quarter ever, and it seems like they are managing the iOS update a lot better than Facebook is. So in the recent iOS update, it really screwed over a lot of advertisers because you can't really track people the way you used to. Facebook is just getting smacked off of that news, you can say, but it appears that Snapchat is actually managing that problem a lot better. And Tom, it's up 40%, and it was actually up a lot more even.
Yeah, it's pretty crazy for me to even say that Snapchat almost got up to that $40 resistance last night in after hours. Like it almost had 100% gain last night. Like I was looking at this and I was blown away whenever I saw the movement Snapchat had. And after what we saw happen with Facebook, Mike, I feel like it's very interesting to see how Snapchat did a lot better. And like you said, they were able to kind of manage that problem with Apple a little bit better than Facebook. But either way, I mean, this is a pretty good explosion. And I was honestly expecting them to kind of tank down after what happened to Facebook. So I'm really glad to see this happen to them. And like, look at their chart, Mike. They had a huge gap down, hit lows of 24.32, and then flew all the way back up to 34 within just a couple of days. Like, this is a pretty crazy chart to look at, to be honest.
Yep. Crazy stuff, Tom. All right. So, honestly, like, stocks are holding up better than I initially expected. Like, of course, we always talk about, like, DraftKings, so we'll take a look at that. But, like, it's up 0.39%, which is basically nothing. But still, with everything going on, like, I guess it's better than I was expecting because just the market's just been getting destroyed, like, day after day after day. So I guess that's good to see. But then again, like, we have some stocks barely in the green, and we have a decent amount of stocks definitely trading lower.
Yeah, and the good news is that on my watch list, there is a couple stocks trading really low. We have F down 10%. We have Clorox down 11% on their earnings, unfortunately. But as far as stocks to the downside, most of them are down like 2 to 3%, which I think that's a pretty good sign, especially with how we've been seeing some of these growth stocks going down like 5 to 10% on the daily lately. That doesn't mean they won't end up there. Like, look at poor Peloton down 3%. Really turning over, and if they end up falling below that low of the week at 22.81, it's not going to be looking good for them. So hopefully some of these stocks turn around, Mike. It's not the open people were hoping for, and we even have Amazon kind of pulling back in a major way. They're still up 9%, but they're just pulling back in such a large way that it's obviously going to probably make the market go down a little bit here. But some good news, Mike, is that crude oil kept going. We're up to $92 a barrel now on our quest to 100.
Oh gosh, Tom, how are like Exxon and those stocks doing?
Yeah, it looks like Oxy's breaking out in a good way, up 3.6%. We have Exxon and Mobil up 2.3%. Looks like they're actually starting to break from their consolidation this week. So looks like the oil plays are starting to move up once again. And these could be good intraday plays. I really don't recommend buying and holding them for the longer term. But if you want to play them in the short term, I feel like it can be a good way to go. But man, look how explosive some of these stocks have been. Like, I just can't believe they're still going too. Like, if oil gets to 100, it'll just blow my mind. So I can't believe the way that the oil market's been bullish. And I'm sure that all that news with Russia and Ukraine hasn't helped things.
Yeah, I mean, it's just going up and up and up. So that's crazy.
Inflation,
crazy.
They've been saying.
Wow. Alrighty. Well, on that note, how are other commodities doing, like the precious metals?
Yeah, like let's see GLD, because I was kind of hoping that GLD would start to get a nice rise here with oil and just as the market started to fall. And it looks like GLD is kind of just stagnant today. They did fall down this morning with that jobs report, but I will say it was looking pretty good yesterday. I know yesterday, Mike, me and you were a little surprised. We checked on gold and silver and we saw that huge drop and then huge recovery early on in the morning. And, it looks like that could be happening again here today. But either way, the metals are just really slow this week. And I feel like that's a good sign, especially with the market falling.
Yep. All right, cool. And then we have Mike saying, is it me or does everyone have a really bad feeling about the market over the next few months, perhaps the rest of the year? There's just a lot of things going on right now. Like, there's just a lot of uncertainty. Of course, we have everything with Russia and Ukraine, but it's just been a wild, wild ride. I mean, I don't have any crash feelings. Like, we can definitely continue lower, but I mean, personally, I'm not expecting like a full-blown crash. Like, it takes a lot to see like a full-blown market crash, and those are extremely rare. But with everything being said, yeah, I mean, it's looking a little bit rough. Like, I don't know about you, Tom, but like I'm just kind of expecting like some consolidation for the next couple months, and then, as we would expect, like a slow move up. It takes a ton to see a full-blown market crash. But again, there's so many variables that are impossible to predict. Like, of course, everything with Russia and Ukraine and any China tensions and, how the Feds act, what Powell says in his next FOMC, and a bunch of things like that.
And Mike, do you actually remember the numbers for the exact numbers for a market crash? Because I know that there is actually like a technical term. It's like 15%, or I can't remember the exact number though.
Yeah, I thought it was 20%. So hold on. Let's see. Market crash, when the market falls 10% from its 52-week highs, but a lot of people consider that a correction too, because technically we're already at 10%. So I believe that's quote-unquote correction territory. I really think it's a subjective term. I know like some people do have specific levels, but I feel like every site kind of classifies it differently.
Yeah, so it looks like to fall around 20% from highs, we'd have to get down around 3,800 on the S&P 500, or I should say the /ES futures here. But looking at that, even if we did fall down to there, we would still be on a pretty good uptrend even. Obviously we'd be down for those couple of months, but yeah, I mean, I feel like that we could see a drop, Mike, especially with the way we've seen Facebook and Netflix and some of these bigger players fall down, and with the way rates are going. But I don't know if we're going to fall 20% from the high. That seems a little steep, but I could definitely see us coming down and retesting the lows of a couple weeks ago, maybe around like 4,200 or even maybe around 4,000 in a really bad scenario. But I could see us retesting at least like 4,250 down here. But that doesn't mean it's going to be a crash. It just means that we're going to have a bit of a pullback for a couple days.
Yeah, we'll see. I mean, the market has been so wild, Tom. This has been one of the craziest earnings seasons I think I've ever seen. But maybe I'll take that back. I would say during like the 2020 meltdown, I would say that was a little bit more crazy. But like we have companies, let's say Amazon, for example. This stock over the past 3 days, or even like the past 5 days, went from like 2,800 up to 3,100, down to 2,800, and then back up to 3,100. Like, these are huge moves for a company like Amazon. And then like I can go through probably like 5 more other examples like this out of huge companies. So it's like, it just goes to show you there's so much volatility. It's like the market just like going back and forth, and it's just wild.
Yeah, it really is. And whenever we usually see this, what generally benefits pretty good is the VXX. And the VXX is doing pretty good this week, but I'll be honest, it could be doing a lot better. Like you said, the SPY is so up and down that it's been causing the VIX to, obviously like go in these strange consolidation phases. And like you mentioned, like the market's been all over the place. And even this morning, like, look at this. The SPY sold off, and now we're all the way back above the closing price of yesterday. Like, look at this. We're technically green today now.
Yeah. Alrighty. So let's see. We have Johnny saying Square below 100. Let's take a look. Square, SQ. Yeah, it's right at that $100 level. It was just below 100. But, Tom, it looks like we're bouncing off of that support, at least for now.
Yeah, we are. And I'll tell you what, if this one ends up bouncing here intraday, it could be a pretty good play. But, keep in mind, if Square breaks below 100 in a major way, you might have to cut it pretty quickly. But I feel like Square could be a pretty good play, especially if this ends up holding up. Like you mentioned, that's a huge support at $100. And of course it fell below, but you always have to give or take like about $1 whenever these stocks are moving like this. Because, sometimes they fly through that support and then they just get bought right back up. Kind of like what we're seeing here.
Gotcha. Alrighty. So let's see. So we have Mike saying, how does guidance look on Amazon? So Amazon's guidance was decent. It definitely was not like amazing like Snapchat's was. Basically, here's just a quick recap of Amazon's guidance. Their net sales for the upcoming quarter are expected to be between 112 billion and 117 billion, and this is basically like a 3 to 8% growth compared with the first quarter last year, so 2021. And their operating income is expected to be between 3 billion and 6 billion. And to put that into perspective, it was 8.9 billion in the first quarter of 2021. But this was expected for a while because they have some depreciation expenses. So all in all, like, it was mixed. It definitely wasn't great, but I would say like other parts of their earnings report really carried Amazon to the upside.
Yeah, I'd say so as well. And Mike, I was really happy to see that they came in with pretty good numbers out of like their Amazon Web Services department and things like that. And then they also announced they were raising that Prime subscription by 17%, which is that's a pretty steep raise, you know? So I think that should end up helping them over the next year in a pretty good way. So looking at them, I like Amazon, Mike. And, you know, it seems like some of these big powerhouses reported decent numbers. Like Amazon came in with good numbers. Apple came in with good numbers. I know a couple of them came in and obviously didn't do the best, but it seems like the big three, like Amazon, Microsoft, and Apple did pretty decent. I know Microsoft fell down and then came right back up, but at least they ended up green.
Yeah, like those ones did decent, but then we had Facebook that just did terrible, you know? Like,
I know, but they're not. I don't count them as a powerhouse like Amazon, though.
Gotcha. I mean, to be fair, they are a FANG stock, so.
But people say it should be called Tang now.
Yeah, true. How is Tesla doing?
Let's see, TSLA. They're up 1.48%. Definitely holding up pretty good this week comparative to a lot of stocks. So that's good to see. And you know, they're not exploding, but it looks like they're just kind of consolidating and going flat. I know they were looking pretty bad last week. Let's maybe go on like a 180-day, 1 hour chart. Yeah, like last week they were looking pretty bad after their earnings, but it's good to see them kind of holding their ground here. Hopefully some of these stocks like Facebook start coming back up. And if they do, I think it'll really help out some of these other companies, of course.
Burning theta, Tom. You know.
Yeah, exactly. And of course, we're getting a theta burner on one of the most popular stocks in the world.
Yeah. And plus the IV sky high. I'm actually curious. Hold on. Let me, I just want to pull up like the 900 strike straddle for this week. Like, I know it's going to be brutal, but like basically every put on Tesla today is in the red, I guess, as you can expect, because the daily expiration and the stock is up slightly. But I just want to pull up this Tesla 900 strike straddle. Give me 1 second. All right, so we'll go to the call. All right, cool. So, wow. Oh my gosh. So, let me pull this up. So, on the 26th, on the 26th, January 26th, Tesla's 900 strike straddle was going for $12,500. Today it's going for $2,700. So I guess you can expect that from that weekly time killer, I guess you can say. But I'm just curious, like how bad some of the other options were. You know, like normally, like there's a ton of retail traders playing Tesla options, and when you had the stock doing nothing, plus that crazy high IV, it's definitely not a good combination.
Yeah, it's definitely not. It's a retail trader's disaster or a retail trader's nightmare. I mean, man, it's definitely not good to see this happening. And I'll be honest, Mike, like when I look at Tesla on the daily chart, with the way it started falling below some of these pretty major levels like $900, and with the way we're starting to fall below some of these trend lines, to me, it's just not setting up the best. Like, I know it's moving okay right now, but I have a strange feeling that some of these stocks might start, they're not going to fall down as much as Facebook did, but I have a feeling some of these might catch up a little bit. You know, I know Tesla fell with their earnings initially, but I just feel like that as the overall market starts to go down, I think Tesla will start to fall out of this range a little bit more. And that doesn't mean I'm totally bearish on them for the longer term, but it's just for these next couple of months while the Fed kind of adjusts their policy. I think that it's going to really affect some of these stocks, and it already has. You know, Tesla's down quite a bit from its highs, and you know, this might be the bottom down here around 800, but personally, I just don't think so right now, especially with everything else going on, with especially seeing how like Facebook and some of those stocks fell. like I said, I feel like some of these other stocks are going to start catching up to this one. And I know Facebook's in a different situation, but I just feel like that with the way this one fell and with the way we're seeing Netflix and everything else down, it's just not a good combination. But Mike, I did want to point out that Facebook is bouncing on the 1,000 SMA here on my chart, which is generally a pretty good longer term area to pick stocks up at. Like I've seen so many bounces on this 1,000 SMA. Who knows? Maybe Facebook will start to get a bounce here.
Awesome. All right. Then we have Carlos saying, "Hey guys, I'm thinking about buying 100 shares of Palantir. I work in DC and I've seen an increase in advertising. What's your thought?" I like it. You know, it has a lot of potential. I will say, like, of course, Palantir isn't going to be as safe as like the S&P 500 or, you know, like an indice or anything like, or an index, I should say. But then again, it has a lot more potential for like a crazy pop. But all in all, I do like Palantir. They're in a great industry and they're growing at a pretty awesome pace. One thing that you can do, which is just one possible move, is like, let's say you're looking at Palantir right now and you're like, all right, right now it's at $12.50. You know, a couple months ago it was at $28. And you're like, all right, now it's a pretty good level. What you can do instead of buying shares at like $12.50, you can like go to the options chain, and let's say you went to like February 18th, you can sell like the $13.50 put options, which are in the money, and basically you'll collect like $165 for doing that. And basically you have a very high chance of getting assigned the shares because you're in the money, but you also will have a lower cost basis because you get paid a premium to write that put option. So basically, it's just like a different way to buy shares, and you get paid to do so, and it lowers your cost basis. So it's just one thing to keep in mind. If you're not familiar with like cash secured puts and writing put options, then feel free to just ignore it. But I just figured I'd throw it out there because whenever you have a stock that is tanking down a lot and IV is high, it does present a good opportunity to short put options because you can really capitalize off of the low stock price and the expensive options.
Yeah, and there's a pretty big support coming up on Palantir right around $12. So if you were going to look to get some shares, I mean, this support might end up being a pretty good area. So I like it, Mike. That's a really good way to go. And I really like how you can short that put that far into the money here, almost like $1 into the money, and then still get that good premium. Like that shows that these the IV and the premium is pretty high. What are we at? 98%. So yeah, really good strategy there. And I really hope Palantir goes up. That's good to hear that they're increasing advertising and stuff like that, especially in DC. So I think that's good news for them. And I know that they have those military contracts, which is good.
Yeah. All right. We have Tap saying, how would the energy sector react to potential war if it started to happen, in your opinion? I would think that it would rise. You know, it's been rising anyways, but I would expect it to continue to rise for a variety of reasons. But, Tom, I don't know if you have any different thoughts, but I think we should, like after the stream, Tom, we should take a look at how energy prices, like in oil prices, have reacted throughout some of the past wars.
Yeah, definitely. Let's actually go back really quick to like the early 2000s and like let's see how they really did. So I know that you know, what was it, Mike? September 11th, 2001 was the was 9/11, correct?
Yep.
Yep. So September 11th. Let's see, we're in 2001. So we can see September 11th. Pretty much ever since September 11th, oil looks like it dipped down in the short term, and then once it looks like we've actually started like getting into the Middle East, you can see it started really flying up. And I know that it looks like in the shorter term, whenever it happened, Mike, oil actually fell down, which is pretty interesting. You know, you would almost expect that to rise. It looks like, though, it really ended up rising like once the war started kicking off rather than the announcement for it. So we'll have to see how that ends up playing out here because, you know, Russia and Ukraine, that's going to be a pretty big deal. I don't think that we're going to go to war. I think it would be more of them going to war. I know that we're sending troops and stuff, but that doesn't mean that we're going to necessarily intervene with anything. But it's just such a tough scenario, Mike. I would think that it would make oil rise, but it looks like in 2001 it made it go down for the first couple months before we actually got there.
So how did oil do in 1990 and 1991? Because that was when the Gulf War was going on.
Yeah, it looks like it ended up rising then as well, and that's a pretty big jump that we saw out of oil. So that's good to see. This is more of what I would have expected to see after, or I should say, in 2001. So pretty crazy to see, but I think that's cool, Mike. It obviously shows that oil could get a pretty good jump if something does happen, and I would think that with Russia being involved, I would think there's a pretty high chance for oil to move, given that Russia, I believe, is the one of the biggest outputters in the world, if not the largest.
Yeah, so it looks pretty mixed in terms of how oil moved. Like obviously, like there's a lot more that goes into oil pricing than war, but war can definitely have a huge effect on it. It's definitely a great question, Tap, and I feel like we should definitely like back test more and see how oil has reacted historically. Because I'm just like looking at like this like little table of like all of the wars that went on lately, and like it's kind of sad to say this, but like there's basically war all the time. Like I'm like looking through like all this data, and like I think like literally every single year there's at least a couple wars going on, but of course some wars are a lot larger than others. So I don't know. I think there's just I think that's a really interesting point, Tap. So thank you for bringing that up. And either way, oil is definitely on the uptrend.
Yeah, and I would think personally that like if we did see increased conflicts, I would think oil would end up rising up above $100 a barrel. There's been a lot of analysts and stuff saying that it could happen, and it's not good news that Russia's the main player in this conflict. If this was a war between like two small countries, it wouldn't make a big deal. But obviously with some of the big players in there, it's gonna have a big effect on things. And I've even been seeing stuff, Mike, where some of the European countries like Germany, for example, and countries like that are going to start like shutting down their pipelines to Russia over some of these issues going on. They're also going to try to like implement sanctions against them. So we'll have to see what ends up happening. I know sometimes those sanctions can really make oil go crazy too.
Yep, true that. All right, let's see. We have Johnny saying, I have the NVIDIA March 18th 225 strike put and down about $1,000. Wondering, should I close or hold the put over the weekend? I have to protect my shares I bought at 320. All right, so if this is a protective put, 225 strike, let's see. NVIDIA 225s, dang. So it's March 18th. See, the problem is that, like, if this was, like, just, like, a normal swing trade, then there's, like, more flexibility that we can do. Like, there's, obviously, we could, like, turn it into a spread or something like that. But the problem is that it's a protective put, and you're looking to protect your shares. But then, again, the problem with that is, like, you had the shares at 320, and the put strike is only 225. Let's see. He said, wondering, should I close? You know what? I mean, I guess at this point, you'd probably want to hold over the weekend, given all of the crazy things we have going on in the market and in the world right now. One thing to keep in mind is, like, holding over the weekend, no one knows what the price action will look like on NVIDIA come Monday, but the theta won't be that much of a game changer just over that one weekend. So if I were you, I would hold it, but then again, I would have gotten a little bit closer to the money, but IV is rising, and if NVIDIA does continue to fall, that can definitely like revive your put.
Yeah, and personally, it's going to be really hard for me to think that NVIDIA will be, breaking out today and coming up towards like that 250 resistance or anything like that. Like, I know it can definitely happen. The market's been very surprising over the past week. Like you said, Mike, it's been up and down almost every morning. So I wouldn't be surprised if it happened. But with what I'm seeing, with the way we fell below supports around 240 this morning and stuff, I really see NVIDIA possibly continuing to fall off. Same thing with AMD. They had a nice triple bottom down here, but I just feel like that they might start to tumble over, especially if we see that overall market start to fall. But yeah, I think I'm with you, Mike. I would probably hold it. I also wish that you could have got a little closer to the money, but either way, 225 is not It's not terrible, especially since you have March sometime out to March 18th. I'm really glad you're not saying that this expires next week.
Yeah, that'd be a problem. Let's see. We have Dennis saying, "Good morning, guys. Do you like puts on Boeing? At what strike, if so?" So yeah, this was my day trade today. It's just kind of like lingering right around some pretty big supports. Of course, the major support is 200, but there's also another level right around 203.25. I like it, but like it's not like it's not like the holy grail of setups. It definitely has potential to continue to fall, but right now, the market is holding up and it's actually uptrending. Like I'm looking at a couple different stocks or quite a few of them, and they're definitely uptrending. I have a lot of calls on my breakout scanner right now, so it's like the setup's decent, but you really don't want to be playing puts when the market's rising. So if the market turns around and if the sentiment changes, then yes, I do like puts on Boeing. And for the strike price, I would say if it's a day trade, I'd say like the 205 strikes for February 11th. If you want to get a little bit riskier, you could go with like the 202.50s. Those aren't bad. But yeah, I mean, it's really only a day trade play, and I would not play it if the market keeps rising the way it is. So right now, it's not a play unless the market turns over.
On your day trade, did you have it falling below like 203?
Yeah, basically, I mean, the exact level was 203.25, but basically.
Yeah, gotcha. So yeah, once we start to fall below like 203.25 or 203, that I think that'll kind of signify that the market's kind of falling over too. And I think it'll be a pretty good put play also. You know, we saw some pretty lackluster earnings this morning, Mike, from some of these companies in the reopening plays sector. We can see Royal Caribbean actually took a bit of a tumble on their earnings here, which is not good. I haven't really read into it too much, but we'll have to see how they ended up coming out. It looks like they were estimated to have a negative 3.7 EPS, and they came in with a positive 0.55. So I don't know if they're falling down on a bad outlook or if their revenue came in under expected, but definitely not good to see companies in that sector going down. I feel like that will definitely play a role on like Boeing and some of those other companies. Like we can see Carnival Cruise Lines is down. We even have like Delta Airlines down this morning. AAL's down. I'm wondering if BA will start to catch up soon.
Gotcha. All right, cool. And then we have TAP saying Russia is a huge gas supplier, so if they cut Europe out of gas, it may affect those prices. So yeah, natural gas, Tom. Yeah, how's natural gas looking? I think it's /NG for natural gas futures. I could be wrong though. /NG.
Oh yeah, I was looking at regular gasoline. Let's see, /NG. Yeah, natural gas is actually coming up a little bit today, but wow, I mean the natural gas chart is pretty insane to look at, Mike.
Yeah. So then he said, so it's not necessarily oil, but gas will be a huge problem, and this war may affect both. Look at APA, OXY, or that ETD or ETF. I think he meant to say XLE. All of them are green in January. So yeah, I mean it's a great point. The energy sector has been booming like basically no other sector over like the past couple months. So it's like it's booming. You know, there's not really much else to describe it besides that. And the war is definitely it's definitely something to keep in mind. And I actually pulled up a table of the world's top 10 largest oil producers, and we have the United States coming in at number 1, and this is for 2020. Saudi Arabia, Russia, Canada, China, Iraq, and then I'm not going to list everyone, but yeah,
Did you just say Canada produces more oil than China?
Yeah, I mean, at least in 2020.
Wow, that is very surprising to me. And wow, I just cannot believe you said that, just given how large China is and then also how many people there are. I would have thought they would have been one of the top 3 or top 4.
Yeah, so, and this is coming straight from a government website too. So it's EIA.gov, and it's just the top oil producers and consumers. So yeah, I mean, the U.S. comes at like 18.6 million barrels a day, and Saudi Arabia is at like 10.8, and then Russia's at 10.5, and then Canada's at like 5.2. But still, I mean, what I'm curious is like, let's say there's like a giant conflict with like Russia and Ukraine and all that, I'm curious is like, let's say the price of gas just rises at a crazy pace. Obviously, like that would affect the entire world economy. So like I'm curious, like would the U.S. and Canada and I don't even know Brazil like produce like extra oil to like kind of lower that price? Because like it kind of hurts everyone when prices are that high. Like I don't know.
We've actually already been doing that a little bit. I know that a little while ago, Mike, Biden actually had a deal going on with China and I believe India, or it was a few countries, but I know that China was involved in this. And pretty much like China, the United States, and all these countries, they have oil reserves. And at that time, we were actually kind of selling out our reserves and kind of flooding the market to try to bring oil down. We can actually see that crude oil on the chart had a huge drop after that announcement was made and ended up falling down towards like $66 a barrel. But it just, I guess it wasn't enough to help. You know, oil just turned right back around. And now over the next couple months, we're back up to $92 a barrel. But yeah, I mean, they did try, Mike, and it wasn't able to have much effect.
Yep. I guess we'll see. You know, there's a lot of things that are outside of everyone's control when it comes to this, but definitely a great job, Tap, for bringing this up because it's definitely an interesting topic. So shout out, Tap. Thanks for your, I guess you could say, great points in today's stream. Then we have Daniel saying, do you like those 3x leveraged ETFs? My faves for swings are Gush and SOXL. I'll admit, you know, they're fun to trade, but they're not meant to be held for the long term. Like even if you like read into like the ETF's like own website, like they straight up say like do not hold this long term. Like Tom has to like really zoom in just to see the chart for this one. But basically the leverage factor with these leveraged ETFs kind of work the way theta works with the options market. So over the long term, these ETFs do decay, and it's good for short-term trading, but for long-term trading, it's just absolutely brutal.
Yeah, and we can see here like how big of swings like Gush really has. Like, look at how Gush was at $120. We tanked down 30% almost, all the way down to 84, and then we're exploding all the way back from 84 now up to 122. It's just that's a pretty crazy that's some pretty crazy swings going on there. So looking at it, it's just some of these 3x stocks, Mike, I'll be honest, I used to trade these a lot more whenever I first started trading, and they were pretty tough. You know, like I'll be honest, I used to trade like JNUG, the gold ones, and then like they said, Gush and Drip were ones I also played. And you know, it just honestly, it's just too much leverage. And the issue I have with it, it can be really good for like quick like runs or a quick scalp trades. But as far as like holding overnight, sometimes you'd wake up to these things down like 10-15%, and it's just crazy.
Yeah, no doubt. I mean, they're fun to trade. It's just long term, you have to be really careful. And then we have Vicky asking for some levels on Uber.
On Uber?
Yep.
Okay, yeah, with Uber, it looks like we're rising up today. We're up 3.8%, doing pretty good. We're actually heading into earnings. Looks like there's a pretty big support level on this daily chart, right around $35. Let's go see the intraday levels, though. So yeah, it looks like there's a big support around 34. I'm seeing another big one. Oh, it's tough to say, Mike. It looks like 35.50 to 36. You have to give or take about 50 cents, but there's definitely another big one around $36 that we are having some trouble rising above today. I'll go ahead and throw that level on the chart. It looks like Uber's kind of just been stuck down here at the bottom, Mike. Like we were up and breaking out early in the week, but we did end up falling back down with some of the bad earnings. I would say if we can break out above 36 today, I would really look at some of these upper resistances, like around $38 or up to around like 39. I think that's going to be the next levels to look at if we break 36, but 36 looks like a pretty good resistance here.
Sounds good. All right, Tom. Well, it looks like the market overall is trying to come back up, and we are seeing a decent amount of companies rise up. Like the market, it's not doing great. Like it's only up 0.2%, but we do have some companies like Chewy up 9%, Spotify up 6.5%. Like Square up 4.5%. So it's like while the market is just like holding up, we are seeing a lot of companies that have just been getting absolutely destroyed lately pop up a lot better than the market overall, which is a good sign. Part of me wonders, like, is this just shorts covering, or are people buying the dip, or, you know what I mean? Like,
I'm hoping it's starting to be the dip getting bought up. Like I know, I've been seeing Chewy go up all morning on my watch list. It's all the way up to 8% now. I knew this one was one of your favorites. I was kind of eyeing it up earlier, but looking at it, let's see it on like the 5-minute chart. Like it's getting up to some pretty big resistances around like 48 or 48.40. Yeah, I mean, I feel like this could be some pretty big some buys coming in here, Mike. Like look at the volume coming in over the past couple of days. Like yesterday morning, there was some pretty big volume coming in on Chewy, and then we started getting some pretty major moves to the upside. Like I would think that was some buyers coming in there, or at least some pretty big shorts covering. Like that had to be some pretty hefty shorts. But either way, I think that's it's good news to see these stocks rising. And Chewy's one of my favorites, Mike. And one of them that we haven't talked about in a while that's kind of going up too is ORCL, or Oracle. I know they're not necessarily up the most today, but they've been kind of holding their ground a little bit better than some stocks this week, which is pretty surprising. And if they start breaking out, I could see them having similar moves too.
interesting. And what's also interesting with Chewy regards to the short is Chewy's short float, according to FinViz, is 26.8%. That's insane. So when we do see the pop, not only out of Chewy, but other tech plays or even growth plays, that will be it'll be a volatile one, because we're gonna have the shorts covering plus people buying the dip, just as like value investors or even just like long-term investors. So that's gonna be interesting. But I will say it is nice to see like the growth plays and even a lot of tech plays outperforming the market today. So I'll definitely take it. But looking at some other like big movers so far, I mean, this energy sector is insane, Tom. Like Exxon is just blasting up. Exxon's up 3% today, and it's just been like going up like every week for the past couple months. So it's a powerhouse right now.
Yeah, it has, and I can't remember the exact numbers whenever they reported last week, Mike, but or actually earlier this week, but I thought I remember they said something like the revenue increased like 80% year over year or something. Like that's pretty good. And I know oil prices were low and now they're super high, which probably makes a lot of that profit. But still, though, I mean, it's good to see. And you're right. I mean, these stocks are getting so explosive that it's just blowing my mind. Like we've been straight up from $60 up to 82. Like look at this movement. There's been some consolidation, but almost none, to be honest. It's just been almost straight up. And I don't know if I like it or not. Like we said, the main reasons are because of war, inflation, obviously maybe EVs coming onto the market. Like there's just so many different factors hitting oil. And it's not a good sign, in my opinion, for obviously for the average consumer, because you're going to be paying a lot more at the gas pump. We already have high inflation happening with everything else, and now we have to pay more for gas. You're going to have to pay more for, natural gas too, and oil, and just everything in general. So it's not a good sign, in my opinion, Mike. And like we've been talking about a lot, the SPY is just very stagnant this morning, and I'm wondering if sometimes, like whenever we see oil fly up, sometimes the market starts to go down. So we'll have to see how that ends up playing out, because I really hope that the SPY ends up holding some of these good supports today, because if not, I mean, I could start to see this one sliding off pretty bad.
Yep. All right, we have Johnny saying, do you think Rivian shares are a good buy at these levels? So Rivian, like, I know like their trucks are really cool and all that. I know I was like hating on them big time when the shares were at like 179, because their valuation at that point was just ridiculous. They were the world's third largest auto manufacturer by market cap with zero in sales. But I know that is that's definitely changing, because they're definitely developing more. It's a company I'm open to buying and holding for the long term. I just have to really analyze their fundamentals, because I want to make sure that I don't overpay for this one. But long story short, I'm definitely willing to hold this one. I just have to figure out at what price I'm willing to do that. IV's high, so if I do decide to I guess you can say, play this one. I'll definitely sell some short puts on it before I enter, because there's just a lot of volatile stocks at low levels, and you can really take advantage of that with the crazy IV.
Yeah, you really can. And I'm really eyeing this one up for the longer term too, Mike. I think they'll be pretty good. You know, they make those trucks that I believe they won truck of the year this year. And then it's just obviously they have some pretty big backers. You know, they have I should say Ford has a big stake in them. Amazon also has a big stake. And I don't know if you remember this, Mike, but I think Amazon's earnings were pretty good last night, and part of that was attributed to Rivian stock doing pretty good. So that's good to hear as far as news for Amazon. But either way, I mean, with having those big players having such a large stake, being Ford and Amazon, I would think that Rivian would start to do better in the future. Like you said, this year might be a little bit different than next year. I'm really curious to see how it is whenever they report earnings here on March 10th, because that last earnings report by Rivian was pretty awful. You know, they came in at a negative 12 EPS, which is kind of expected because they're just in that very beginning growth stage. But at the same time, though, they were expected to produce like 1,200 vehicles, I think it was, and they only came out with like 500 or something. And that's a pretty low number. You know, you're looking at stocks like Tesla producing like 300,000 or even more vehicles now. And, you know, you're looking at Rivian missing out on 1,200 production goal. Like, that's pretty bad. But, you know, they are in the beginning stages. And I know, like, I was one of the ones who have always said that Rivian, I kind of like them a little bit more. And I still stick by that. You know, I think they'll be pretty good over the next few years. Like Mike said, though, you just have to find out the right price point to buy, because we don't know if $50 is the right price yet. You know, if we're going off their last earnings report and off their last production, I mean, $50 might be too high.
Yeah, so it's tough because in the market, like, you can buy a great company, but if you buy at an overvalued price, then you're screwed. You know, like, you can be completely right on your predictions with revenue, growth, delivery numbers, everything, but if you pay the wrong price, that's the problem. So we'll see. I mean, I know that Rivian's price of sales right now is 54,664, which is the largest I've ever seen. But then again, the numbers are skewed right now. They're just in the beginning stages, so it's like it's hard to say. So we'll definitely.
And this one's probably going to get pretty volatile, Mike. Like, wouldn't you think that maybe this one will have it'll probably have a lot of up and down movement over the next year. Like, I could see this one possibly, like, I don't know, just hypotheticals, but like probably having like some nice like 25% swings in all directions.
Oh, no doubt. I mean, the IV's hit 115%, so the market's definitely expecting a ton of volatility. But yeah, I mean, plus it's an EV stock too. So we'll definitely keep our eyes monitoring this one. And Tom, it looks like they have earnings in, what is that, like a month?
Yeah, it's actually on March 10th, so that's going to be pretty interesting. It's actually a little bit further than we thought. It looks like, yeah, about a month and 6 days. But yeah, I mean, that's going to be a pretty tough earnings report for them. You know, I know the last one was not good. So hopefully this one, they come out with some good production numbers, and maybe they'll say that the chip shortage hasn't been affecting them as much.
Yeah, hopefully. Then we have Mike saying, how would you guys play Ford? And then Leaps with a question mark. I definitely would not do Leaps, but they can work if we see a giant move. It's just like IV's still kind of high, where I don't want to be paying a premium for a stock to explode up, especially when their earnings weren't the best and the market overall is tanking. So it's like, I just feel like that's not like the best move to make now. Like, if you have the capital, short puts would be ideal. If you don't have the capital for that, then I really just think shares. You'll have obviously a delta of 1 for every share that you have instead of the options, which would be a little bit different. But I just feel like Leaps like aren't a great move to make with it now, because if you want like any quality leap, let's say we looked at, the January 20th of 2023's expiration. Let's say you select the 17 strike call leap. You're going to pay $370 for that, right? You're going to pay $370. That means your break even is not until $20.70. So it's just like, I'd rather not pay that premium. I would rather just buy the shares, and then if the stock rises from here, it's profit. With the leap, it's like I just don't want to. I don't want to have a break even that high with Ford. Like it can work. It's just like I just feel like it's not a smart move to make over the long term. Like right now with IV so high. So long story short, I think shares would be a much better idea. It'll be easier to profit, and you have unlimited time.
Yeah, me too. And Mike, even the shares are pretty cheap. Like we're not talking about a stock that's $200 or anything. We're talking about $17 a share. I mean, Ford was almost like a penny stock a couple years ago. Like it's pretty cheap. So looking at it, I think shares will be a good way to go as well. I know it all depends on your on how much you can throw into the play. But for example, if you were going to spend $300 per leap and then maybe get 3 leaps and put $1,000 on it, I feel like that maybe Ford would be a better way, or just the shares on Ford would be a lot better way to go, like Mike said. And then also, Mike, like looking at some of these technical plays here with Ford, like, man, they just fell out of that huge range and they fell below that huge support around $18 today. Definitely not good to see that. It looks like a pretty good dead cat bounce setup here, Mike. Like, we had that perfect consolidation, the perfect double top at $21, and then just that nice break of support. So personally, I could see this one going lower over the next couple of weeks. I do like Ford though for the longer term. It's just that obviously for the next couple of weeks, I feel like that averaging into shares will probably be the better way to go. I could see Ford coming down towards this 1650 support at least.
Sounds good. All right, we have Vicky saying hit that like. So yeah, if you guys like the stream, it would really mean a lot to us if you could smash that like button. We'd really appreciate it. And then we have Tap saying Exxon Mobil has the same growth as those energy stocks in January, and it jumped from $32 in October 2020 to $82 today. Yeah, it's been really running. Tap also said we are focusing on AMC and other squeeze stocks, and XMO made that money within the last year. Tap said, is Exxon Mobil too high, or is it at a right price? And then he also mentioned Sofi. So we'll start off with, I guess you could say AMC. That one's been all over the place. Tom, it's just been slowly fading. It's bouncing off that $15 support. The lower this one goes, the better the position the hedge funds are in, and the lower the probability of a short squeeze.
Yeah, definitely. And we're looking at that $15 support here. It is holding up a little bit here intraday. So maybe you could get some nice intraday plays with this one. I don't recommend playing it. The IV is way too high in my opinion. And just looking at it overall, especially on the 1-year daily, like Mike said, we've just been slowly fading off here. We fell below that key $20 support. And ever since that happened, the stock has just not been looking good. Now we are seeing some consolidation, like I said, around some of these supports like $14 or $15, but at the same time, I just don't see a huge breakout or anything like that happening anymore. We are down and touching like right around the 1,000 SMA, and we're, like I said, we're at that big support, so maybe we'll see a bit of a bounce, but I don't see it exploding back up or anything. Like a lot of these people are still holding with the hopes of it coming back up to $50 or something. Maybe we can come back up and retest 20 or maybe even like 23 or 25, but I just don't see us coming back up to some of those major levels again.
That's awesome. Mike said, awesome stream, like always. Thanks for everything. Have a great weekend. Well, thank you so much for joining, Mike. We always appreciate you joining, and you're a great member. So thank you so much, Mike. But back to Tap's question regarding Exxon Mobil. Obviously, that's been exploding. In terms of is it too high or is it at a right place? Honestly, I mean, there are so many variables outside of our control that it's hard to say anything with, I guess you can say, a high degree of certainty with this one. There are so many things going on in the world right now with, I mean, there's so many things going on in the world right now. But in terms of Exxon Mobil's price, like it has a price to sales ratio of 1.5, which is low, but then again, like you don't expect a ton of growth out of this one. Tom, would you, in terms of fundamentals, but Tom, would you mind pulling up the dashboard on Exxon Mobil? I just want to demonstrate how their revenue has performed over time. So I know we looked at this one the other day.
I think I was surprised to see how bad it was, wasn't I?
Yeah, exactly. So it's going to load up in a couple seconds. Look at that. Over the years, Exxon Mobil, their revenue just evaporated. Like it's just like, ugh. Like it was $47 billion in revenue in 2011. 2020 it was 178 billion. So how does the quarterly data look?
Let's see. The quarterly is all over the place. It's getting a little bit better since the oil prices are high. But look last year in 2020 when those oil prices got low, their quarterly revenue shot way down. So it looks like the price of oil has a huge impact on this.
Yeah. So like it's a tough one to say because short term anything can happen, and all of the main things with like the price of oil are outside of our control. So we'll see. I mean, it's just not a company that I'll be investing into for the long term. It can do good. It's just like I just see like the world like shifting away from oil. Like that doesn't mean that oil is going to be non-existent in 5 years, but like all of the major auto manufacturers now are offering electric versions, and there's just like a shift in like I guess you can say government policy and all that with kind of like slowly fading out of oil.
Yeah, and I'm somebody who's actually really biased towards oil. I love oil. I love cars. I love engines. I love all that type of stuff. But whenever we start to look at some of these policies, I'm glad you mentioned the government policies, Mike, because we're starting to see states like California. They said that like their whole entire state fleet of vehicles is going to be electric by like, what was it, 2030 or 2035? Or I don't know the exact reports, but some of the policy coming out regarding oil and just regarding like climate change and stuff like that is also going to probably weigh in on these oil companies. Now they are going up short term with the good price of oil and everything like that, but personally I feel like they're way too high right now. And I'm someone who likes oil. Now whenever oil was down here and we were double bottoming at like $55, or if you were getting in at the breakout of $66, I think it could have been a good play. But right now I think you're getting in too high. Oil could still go up. It could go well above $100 a barrel, especially if like war happens with Russia or something. But in the end, I just don't think it's the smartest play to get into. I think it's better for short-term stuff. But kind of like what Mike said, for the longer term, there's just too much stuff weighing down on these oil companies. And of course, they're doing well right now as oil goes up. But at some point, they're not going to have that demand anymore. And right now, the demand's still there and the prices are high. But once that demand starts going away and electric starts getting implemented a lot more over the next 10 years, I mean, I'll be really curious to see how they do.
Yep. All right, Tom, we have some big news out of TTWO. We have George saying Rockstar Games has just confirmed GTA 6 in active development.
Wow, it's about time. I thought they've been in development for a year now, but hey, I guess I'm glad they confirmed it.
There we go. It's been, I don't even know how many years, Tom, but the day has come.
Yeah,
wow.
Man, I wonder how long it's going to take them to develop now. Like, it still might take another 2 years.
True. All right. And then I actually missed Tap's comment with Sofi. So let's check that one out really quickly. SOFI. It has potential. It has a lot of potential to grow. They are growing at a rapid pace. It's just like I'm split on this one. Like I said, it definitely has potential. But then again, they have some serious competition where I don't know, like, if I want to like take a heavy position in SoFi. Like they're competing against some of the largest institutions in the world. So it's just like, that's definitely concerning. Then again, SoFi is like, it kind of makes just like everything easy for the consumer. Like they offer like everything from stock trading to student loans to personal loans to credit cards to everything, and it's easy and it's like, it's growing. So it's like, I don't know. I'm really tempted.
Yeah, I kind of like the company myself, Mike. I think it'll be pretty good. And I like their ideas, at least. That doesn't mean they're going to necessarily explode, but I feel like it's a decent company, especially if you can get it at the right price, like we're talking about. And right now, it's at some of the lowest prices it's been at. So I think it's a pretty good idea that IV's pretty high, which, the market looks like it's kind of looking for a big move here pretty soon. So hopefully that's to the upside.
Yep. Cool. So yeah, Tom, do you have any last minute words before we wrap up the stream?
Man, that is some really cool news to see that Grand Theft Auto 6 got announced today. I know that there's been some rumors about that one for a while, and I'm just happy to see this one kind of, get that good news come in. They're up to 174.50 now. Looking at them on the max daily chart, I mean, they're like right in the middle of the range. I think it's still a good price point to buy for the long term. They do have earnings coming up though, which is going to be a little bit crazy over the next 3 days. It looks like the earnings are going to be coming out Monday. Let's see, I can't actually tell if it's before the market opens or not. It looks like after close. So Monday after close, they're going to be reporting earnings, and who knows, maybe they'll come out with some good news with Grand Theft Auto 6 and it'll keep going up even more. Like, this is a pretty good move, Mike, and we've been eyeing this one up for the long term. I don't know if you grabbed any yet, but I'll definitely be looking at it a lot now.
Absolutely. All right, well, thank you guys so much for joining the stream. Before we end it, I just want to personally thank everyone. So thank you guys so much for joining. Thank you, Hunter, George, Power Sport, Jerry, Ravi, Mike, Vicky, Bill, Tap, Johnny Leverage, Carlos, Dennis, Daniel, and I think that's everyone. Thank you, Head, for joining. And yeah, that's everyone. So thank you guys so much for joining. Thank you, Vicky. We had a great stream, and we really appreciate all of you guys joining. We hope you have an amazing rest of the day, and hopefully the market keeps popping up. So again, thank you guys so much for joining.